Okay, I'm long today for various reasons. It is an inside bar day to the previous day here, going sideways. Um, but overall, we had an explosion up on the day chart, and then now it's consolidating back to some very powerful moving averages. The 20 and the 50 EMA are lining up right here into this fair value gap over here, and it looks like it's an area of support. Plus, we have NVIDIA news today after the bell. So I don't think the markets would necessarily sell off hard before that earnings report comes out. I could be wrong. My stop loss is down here around 19,400, right? So I'm using micros also. So I'm building a micro position right now. I'm holding 3 micros. I don't want to lose more than $1,000. So that's my stop loss. Take a look at where we're at in that process over here in my trading tick charts. You'll see a great rounding pattern. I'm long 3 micros. I started adding, way up higher, and then I added here, and then now I added here, and now my average price is right here. I'm only down $89. I was down about $300. So, if it gets to 1,000, this is where I need to cut it off. It's also possible if it goes down to add more, but I didn't want to do that unless I knew for sure that this level would hold on the. And once it gets back up, if and when it gets back up and we start going green, that's always the challenge, because when you risk 300, you don't really want to close it for $30. But it feels good just to get green again and get back up there, and that's been a big challenge. I'm going to try to overcome that, especially if we've got a lot of time in the day to let this thing process. Also, I started to short one of the MES micros, the ES micros. Over here in the 10,000 tick chart, I started off with my hedging strategy, and you can see it didn't go anywhere, even with that $300 drop on the long side with the MNQ. These are 2 micros. I'm trading micros. I trade the MNQ most every day, MNQ, but I will short the MES against it sometimes. And I'm trying to get a feel for that and see how that works. It wouldn't have done too good today. It wouldn't have done much today. But yesterday it worked out pretty good. But I was just trying to check real quick to see, when we had that drop in the MNQ just a second ago, how far down did that go? It didn't go down very far at all. So those shorts on that would not have helped hedge very much at all. So we're looking for this to get back up. The fifth, really got to get this 5-minute chart, which is great. Yeah, see, it was pushing down really hard right here on that 8 EMA. It was getting red even. Look at that reversal. That's some good strength right there. Okay, so hopefully it'll go back up. I'll let you know how this trade develops. Something else I'm overcoming is the fact of taking losses. It's okay to take small losses, and taking losses sometimes are sacrificial to the bigger plan. So what I did was, a lot of times, when you buy low, real low, and that helps price go back up to the average, lowers your average price. And then sometimes you don't have to wait for the big breakout with the one you added down here. Just get it close to that. Now, it looks like I should have just held it, but it's hard to always try to make every trade a winner is what I'm saying. And if that's the mentality, then it's going to get in the way, because it doesn't matter that every trade wins. What matters is the overall picture and setup and position size and time left in the day, and how price action can kind of like change things. So I want to just get that one off of there, and then now I'm holding 2. Now the plan is, if it comes back down to where I can add lower, I'll pick that one back up. That's my rationale for doing that. And I still have plenty of time and enough room with 2 micros to more than make up for that tiny loss. And now I don't really want to get out of these 2, but getting out of the 1, making that adjustment in case it goes back down, after coming all the way back up to basically break even for the position, I think is a smart thing to do, because you really don't know what it's going to do. So this is win-win, because if it keeps going, I'm holding two, we're profitable for the day. If it drops back down, it's a win because I can take that one that I just sold and buy it back cheaper, lowering my average price even more. All right, let's see how this develops. Okay, price did come all the way down, and it even passed the low of that previous pivot, and it went way down. I just bought back that one that I sold all the way down here. That doesn't mean it's not going to keep going down. See, I'm I'm long 3 MNQ. Let's get this up here. Yep, 3. We're down $380 on a $1,000 maximum DLL. So we're sitting pretty good. I'm glad I sold that one at the top near the average price. It was under, but that's okay. It was pretty close to it, and we bought it back this much lower. Let's see how this keeps developing. Okay, it keeps going down. I'm only holding 3, about $800 drawdown on it, and it's hitting on the daily chart. My whole theory was that it should hold up before the news of NVIDIA, but you never know what the market's going to do. And if it does drop, sweeping liquidity here and previous day, these moving averages into this fair value gap, I'm thinking should hold. But the point is, where's my stop loss limit? Because you can get a deep pintail and it can still come back up. And those are the worst kinds of days. You're usually guaranteeing a loss. But I'm still banking on the idea that these moving averages will hold in this fair value gap area. Yes, it did sweep the liquidity of the previous day, but it could keep going. We need a nice turnaround here. We need some trend lines to be broken, some W patterns, consolidation, and continuation back up. But we'll see. I'll let you know how it develops. Not to mention that if I had stayed in a short on this hedge strategy, it finally did break out of that consolidation area there, and I could have had some profit from being short the MES while I'm long the MNQ. So there would have been some kind of hedging going on there, but I just didn't do it. Okay, so what happened? Well, this thing just kept right on going down, and I still am kicking myself for not having the short in place up here, because this whole thing would have been profitable. I finally did just jump in one short down here because I went long, on another account. This one that it first started, I'm now long 4 micros. Decided to buy another micro right here when it looked like it started rolling back around. But this is where the $1,000 limit was hit. So I was actually down about 1,200 here. So I'm still in that trade, and we did hedge a teeny tiny bit right here, which I don't know, I'm just doing it for principle's sake. And we went long on a separate account all the way down here and already closed those positions, and that's what I was just looking to do, is catch a quick bounce on that extension down like that. Usually you can get something out of it. Doesn't mean it's going to keep going up, but you can get, the probability of a bounce is high. You need to take the trade on a different account, and that worked out. I'm not trying to hold that and build into that position there. I've already got that going on in the top right. Got my short on the other instrument on the top left, and we're still in these trades, wiggling around here, seeing how this all unfolds by the end of the day. So stay tuned. Again, just for the record, I even added a short micro, so now I'm short 2, but you can see we're up $85, $93 already on just 2 from just here. If I would have been balanced all the way from up here where I started, that would have all been profit on that particular account. So again, I want to drill that in on this video as something that I really need to be consistent with if I'm going to practice that, or at least try it out for a while and see if it makes any sense at all to hedge, because the only way it would be bad is if both go in the opposite direction, and that would be the ultimate for that particular kind of trading strategy. But as long as they kind of go in tandem with one another, if they kind of have some resemblance of the same direction, then hedging would be a good idea. I'm not expecting it to be penny for penny equal to the opposite side. In fact, you don't really want that, because then you won't make any money. You have to have something off balance with a hedge in order to make money, or if it's perfectly balanced, there's no money to be made on either direction. So you don't want that necessarily. So, all right, so let's continue watching the video. Okay, I added a fifth one here because the pattern looks good, the momentum looks good, the higher low looks good, if it crosses that anyway. And then we're just right here to break even. And then comes the challenge of, if it gets to break even, how do I handle it? What happened earlier way up here was when I was long 3, I sold one and bought that one back down here. Yes, it kept going, but at least I didn't have to endure that drop for the third one, because I sold it up here and bought it back down here. So the question is, how do I handle it when price comes back, if price even gets up this high? And I'm thinking, basically, how much time do I have left in the day? Do I have time to fiddle with this thing? And it's almost 1 o'clock. It's not even up there yet. It may not get up there. So it depends on, we're running out of time. Break even and be glad. Nobody thought it was going to drop that far, that fast, and to break even with a trade going against you is not that bad, especially when you really hit your maximum loss down here at $1,200. So I'll be glad to break even and keep the account alive and look for the next setup. So let's see how this turns out. So yes, this is the challenge of a micro building strategy, hoping for a bounce, looking for a maximum stop loss, is to build it large enough to be worth the risk, and hoping that you really did find the daily low, at least the low that it's going to be for that particular day anyway. And you never know when you're right or wrong, but making sure that you build the size of it up enough to where, if it breaks this low now, it's really going to put me out. And if it goes up for a reversal, we're going to be doing just fine. But getting that wrong, getting too large, too fast, having another leg go against you in the wrong direction is the challenge for this kind of strategy. Okay, I should have held this position right here. We always say that when we get out of a position, but I did get back in it right here because it looks strong. I got in right there and just got out for break even, because I don't know. But right now, as this position for the short side gets up higher and higher, I am going to want to add to this and build a short position in case it rolls back down. And this is looking good. Hopefully it'll get all the way up here where I can probably adjust this position size, probably reduce the amount of exposure, since it did get back to break even and we are running out of time. So let's see what happens. Okay, the end result basically is simple. I did not get out at $1,000 loss like I should have. If I did, I would not have lost as much as I did today. So down 1,300, but overall in the hedging account practice, we are basically just a couple $100 down from our experimentation. Down $300 or so right there. So that's fine. I'm going to keep practicing. I wish I got to go back and review, because when I was down $1,000 and I was supposed to close the long position, I may have, I lost 1,300. I mean, wait a minute, I lost 1,600 today. So even if I lost 1,000 in the other one, and for some reason I was even down in the opposite direction on the MES, say 200, which I haven't seen that yet, but I'm not saying it can't happen. I'm just saying I haven't seen that much of a divergence to where I'm not at least profiting a little bit on the short in the MES while I'm long in the MNQ, these micros. I haven't seen them both negative that big of a spread. So I'm usually positive on one side when the other side's negative. So the thing I'm trying to say here is I end up letting the account blow all the way to $2,500, and then the other stuff that I made in the account is why it's only $1,600, because I was profitable on the short side. So that's what covered some of those losses. So I guess the moral is that take the $1,000 loss, because no matter where you're at on the other side, $1,000 is less than $2,500, because then you can't make that much on the account in the 50K Apex accounts. 50K Apex accounts, you can't do more than 1/3 of the $3,000 profit. You can't make more than 1/3 in one day, which is $1,000. So the upside is only $1,000 for each 50K Apex account. The downside is you can blow the whole thing and lose 2,500. So keeping it real with numbers, the challenge is getting out when I hit my $1,000 maximum loss. I really got to hold myself to that. If I'm not going to hold myself to that, then this hedging thing is just going to be another kind of dollar cost averaging below your account thing, and I don't want that. So I got to really put some discipline in it. So I'm glad I'm making the video. I'm seeing my weaknesses. I'm seeing the strengths. And we'll just keep going with this. We're down $300 on 3 days or 2 days of trading. One day was up $1,300. The next day I was down $1,600. So let's see how it goes over time. We'll get a better understanding of, is this worth doing or not? All right, we'll see you in the next video. Peace.